Welcome to the deep dive. There's so much information out there, it's easy to get lost. We try to cut through that noise. Today, we're diving deep into clean energy, specifically Premier Energies Ltd. They're a pretty significant player in India's solar scene and growing fast. We've got their latest Q1 FY26 financial results hot off the press, plus their investor presentation and the auditor's report. So our mission today, pull out the really key insights, understand what these numbers, these strategies actually mean, give you a clear picture of the company's health and where they sit in this whole solar market puzzle.
Exactly. And with a company like Premier Energies, right in the thick of this energy transition, just looking at the headlines isn't enough. Not even close. We need to dig deeper, understand the context, the why behind the numbers, the strategic thinking. How do these results actually set them up for what's next? The real story is always, well, it's in those details, isn't it?
Okay, let's unpack those headlines then. Starting with the good news, the bright spots from Q1 FY26. That's the quarter ending June 30th, 2025. First off, revenue. The revenue from operations hit over INR 18.2 billion. That's a solid bump, nearly 10% up from last year and actually over 12% up from just the previous quarter.
Yeah, and what's fascinating about that growth, especially that quarter-over-quarter acceleration, is it suggests they're not just, riding the wave. They seem to be turning their recent capacity increases into actual sales pretty quickly. In this industry, scaling up can sometimes mean a lag in revenue. So seeing this quick conversion, it says something about their operational game, maybe grabbing those key domestic orders efficiently. And it's not just sales. Profitability looks really strong too. Their profit after tax PAT, the bottom line reached, what was it, INR 3.07 billion. That's a huge 55% jump year over year. Plus, their operational EBITDA, that's a good measure of core profitability before things like depreciation, it soared over 53% compared to last year. Oh, and it's probably worth mentioning, Deloitte Haskins and Sells, the auditors, they gave an unmodified conclusion, basically a clean bill of health on the numbers. Adds credibility.
Right, adds that layer of confidence. And speaking of confidence, they also had some news for shareholders, didn't they? A dividend payout. Premier Energies declared their first interim dividend, R 0.25 per share. That's 25% on a face value of RS1. Record date was August 2nd, 2025, a Saturday, and payment should be happening within 30 days of that declaration.
That definitely sounds like they're feeling good about things. A dividend, it signals belief in steady cash flow,
Yeah.
right? And wanting to give back to shareholders. Although, for a company growing this aggressively, you sometimes wonder about the balance. Reinvesting versus distributing cash. Seems like they're managing that balance here. They also mentioned allotting shares, over 2.2 million, to their employee stock option trust, the Patil Eliab Trust. So clearly focusing on keeping the team motivated and aligned with the company's long-term success too.
Okay, so those headlines, pretty positive picture. Let's go a bit deeper now. Under the hood, look at their financial strength. What's underpinning all this? And maybe the most eye-catching thing on their balance sheet is this negative net debt, minus INR 10.57 billion. Now, for a company in a sector like clean energy, usually very capital intensive, lots of building stuff, having more cash than debt, that's more than just good, right? Why is that such a strategic plus?
Oh, it's huge. Absolutely huge. Think about it. This sector needs constant, massive investment. New factories, new tech. Being net cash positive like this, it basically de-risks their growth plans massively. Give them incredible flexibility. They can fund big projects without scrambling for loans or, taking deals on perhaps less favorable terms. And a lot of the strength comes from their IPO back in September 2024. That raised, INR 12.9 billion. A big chunk of that, over INR 8.7 billion, is still sitting there, mostly in fixed deposits and current accounts. But it's not just sitting idle. It's earmarked. It's their war chest, specifically to help pay for that massive new facility they're building, 4 gigawatts of Topicon cells and 4 gigawatts of Topicon modules. So yeah, it's a very clear, well-funded plan for pretty significant growth.
We should probably also touch on that big jump in depreciation expenses, up nearly 98% year over year. Now, normally big expense jump flags concern, but here it's different, isn't it? It's more of an accounting thing. They basically rejigged the estimated useful life of their manufacturing gear because solar tech moves so fast, right?
Exactly. They're saying, look, this tech might be outdated sooner than we originally thought, so they depreciate it faster on the books. It increases the expense now, but it's actually prudent. It keeps the books reflecting the likely real value of assets in a fast-changing field. It's not a negative operational signal.
Right, makes sense. Okay, let's shift focus to their strategy, their longer-term vision. Premier Energies isn't new to this game. Founded way back in 1995, that's 30 years in solar manufacturing? They position themselves as a leading Indian maker of cells and modules, and get this nearly 100% market share in solar cell exports from India. That's quite a stat. They're also pushing innovation, like being one of the first in India with Topicon cells. That's the newer, higher efficiency tech. And they're hitting all the key quality marks, ALMM listed, which you need for government projects, DCR compliant for Make in India.
Yeah, their history gives them a solid foundation. But what's really interesting is their Mission 2028. It's ambitious. They want to be India's top clean tech solutions provider, not just solar panels. Look at the targets. Over 10 GW integrated capacity, that's ingots, wafers, cells, modules, plus 36,000 tons of aluminum frames. And then branching out 12 GW of battery energy storage systems, BES, and 3 GW of solar inverters. It's all built on like three main pillars. Fully shifting to Topicon tech, going deeper with backward integration like that JV with Taiwan Sino-American silicon products for wafers and adding these related products, BSS and inverters. It's not just scaling, it's building out a whole ecosystem vertically integrated.
And you can see how they're building that competitive advantage. It's the sheer scale, that 10 GW plus plan. It's the vertical integration, controlling more of the process. It's the tech expertise, pushing into Topicon, the financial strength we talked about, having the cash lined up, and presumably an experienced team to pull it all off.
Oh, and that point about being India's first LED gold-rated solar factory, that's not just a nice certificate, is it? No, not at all. It speaks volumes about their approach to manufacturing itself, sustainable from the ground up. In a market where ESG, environmental, social, governance factors are becoming increasingly important, that's a real differentiator. It signals quality and responsibility.
Okay, so we've seen their internal strengths, their big plans. Now let's pull the lens back. Look at the bigger picture, the market they're operating in. It feels like they're surfing a pretty massive wave right now, doesn't it? The demand for solar in India and globally, it's just booming. Those projections for India's power capacity additions up to 2032 are staggering. Solar is set to be, 283 GW out of 432 GW total added?
Yeah, the scale is immense.
I mean, 283 GW, that's like adding the entire current power system of a decent-sized country just in solar in less than a decade. How does that sheer scale feed into a company like Premier Energies?
Well, that scale is precisely why their positioning is so interesting. And it's heavily backed by policy, these strong tailwinds in India. On the demand side, you've got government schemes everywhere. Solar parks, renewable purchase obligations, pushing utilities to buy green power, aiming for like 43.3% by 2030. Then there's the huge residential rooftop scheme, PM Surya Ghar Muft Bijli Yojana, aiming for 10 million homes, maybe 30 GW right there, plus the PM Kusum scheme for farmers, another 34-ish GW potential, and the CPSU scheme for grid-connected solar. It's just massive government-driven demand.
Okay, huge demand. But can India actually make enough panels and cells to meet it? Or will they still need imports? What's being done to boost the local supply side?
That's the critical question, and the government is definitely focused on it. Supply-side support is key. They're spending big INR 2.4 trillion on upgrading the transmission grid so all that new solar power can actually get somewhere. They allow 100% foreign direct investment. And crucially, new solar projects now must include some energy storage, at least 10% capacity for 2 hours. That forces the market towards grid stability. And then you have the direct Make in India incentives. The big one is the production-linked incentive PLI scheme. INR 240 billion set aside to support building 48.3 GW of local manufacturing capacity, plus the ALMM list we mentioned, favoring domestic producers for government projects. And those import duties, basic customs duty plus the ADC cess making imported cells 27.5% more expensive, and modules 40% more expensive. That really helps level the playing field. Add in state subsidies, lower taxes for new manufacturers. It's a whole package designed to build up that domestic industrial base.
Right, so all that policy effort creates really strong demand visibility, especially for those DCR domestic content requirement modules that Premier makes. You mentioned the potential from schemes like PM KSU, maybe 27 JW needed annually, and PM Surya Ghar 30 JW. Those are enormous numbers.
They really are. And if you look globally, too, things are kind of shifting in ways that could help Indian manufacturers. The U.S. is looking at its IRA incentives potentially changing after 2027, maybe getting tougher on Chinese supply chains. That could open doors. India itself extended the waiver on transmission charges for storage projects, which is a big boost for BSS, even as the waiver for standard renewable projects phases out. Plus, India just launched a new viability gap funding scheme for battery storage INR 54 billion to help build 30 GW of capacity. And you see similar moves elsewhere, like the EU's Clean Industrial Deal aiming to support local clean tech with massive funding. It all points toward more localized, supported clean energy production.
So, tons of ambition, favorable market, but how's the actual execution going for Premier Energies? What have they actually done recently? What's coming up soon in their project pipeline? They seem pretty busy.
Yeah, they've definitely put shovels in the ground, or maybe silicon on the line. Recently, they commissioned a new 1.4 GeW module plant in Hyderabad. That was May 2025. And a 1.2 GeW Topion cell plant, also Hyderabad, just last month, June 2025. So new capacity already ramping up. Looking ahead, the pipeline is, well, it's substantial. Directly feeding into that mission 2028, they got a 4.8 GW cell plant and a 2.0 GeW wafer plant planned for Naidupeta in Andhra Pradesh. Target completion, June 2026. That wafer plant includes the JV with the Taiwanese company Sino-American Silicon. That's key for backward integration. Then there's a 5.6 GeW module plant in Telangana, aiming for March 2026. And the really exciting bits, perhaps, are the moves into related areas. That BSS project aiming for 12 GWH by March 2027. There's a huge need for storage and strong policy support, as we discussed. And the string inverter line, 3 GW annual capacity by March 2026. Again, addressing a gap where domestic manufacturing is limited, but demand is growing fast.
And all this expansion seems backed by real orders. Their order book as of June 30th looks pretty hefty. Total value around INR 86 billion. Volume-wise, that's 5,545 mil-W. The breakdown. Mostly modules, about 60% of the value, then sells at 39%. Tiny bit of EPC work. But here's the kicker, right? You mentioned this. The entire order book is domestic, 100%. That just screams strong local demand and their ability to capture it.
Absolutely. That domestic focus, especially with the Make in India policies, is a massive strength right now. And, these other things, the accolades, they matter too. Getting their credit rating upgraded to a positive. That's not just a pat on the back. It means they can likely borrow money cheaper for all this expansion. Real financial benefit. And being named a top performer by KIW or recognized by Great Place to Work, that helps attract the engineers, the skilled workers you absolutely need to run these advanced factories and execute these big plans. It builds a strong foundation.
It really rounds out the picture, doesn't it? It's clear that for a company like this, especially in clean energy, just hitting financial targets isn't the whole story anymore. Sustainability, ESG commitments, they're becoming core. Premier Energy seems to get that. Adopting 7 of the UN Sustainable Development Goals is a clear statement. And that internal diversity stat, 38% women on the shop floor, 25% women on the board, that's genuinely impressive, particularly in manufacturing.
It really is. And their environmental actions seem quite concrete too, not just talk. Things like the huge rainwater harvesting facility, zero liquid discharge in their processes, recycling water. These minimize their operational footprint significantly, and the impact numbers are quite striking, avoiding 13 million tons of CO2 equivalent just in Q1 through their products. And the potential from their expanded capacity may be avoiding 167 million tons a year. That's massive climate impact. Being the first LEE gold solar factory aiming for zero waste to landfill, these are serious commitments baked into how they operate. Plus, using solar themselves, that 11.6 milliW rooftop project cutting their own emissions, it shows they're practicing what they preach.
And beyond the factory walls, those community initiatives in Telangana sound quite impactful too. Setting up smart classrooms, supporting healthcare like thalassemia diagnosis, providing clean water, putting solar on homes in a village. That's tangible social responsibility.
Exactly. It connects to this idea of responsible business, creating long-term value that goes beyond just the profit line. It's about embedding social and environmental good into the core business. Ultimately, that builds a stronger, more resilient company that appeals to everyone, customers, employees, investors. It's just smart business these days.
So wrapping up this deep dive, it really feels like Premier Energies is pulling together a lot of threads. You've got strong financials, ambitious, well-funded plans, a market environment that's incredibly supportive, real operational progress, and serious ESG commitments. It paints a pretty compelling picture, doesn't it? Positioned right in the heart of India's energy shift.
Yeah, so what does this all mean for you, the listener? It means you're looking at a company that seems poised to be a major force in India's renewable future. They appear to have both the financial discipline and the strategic vision needed for this massive scale-up that's happening. They're not just reacting, they seem to be actively shaping things.
Indeed. So here's a final thought to chew on. Given those huge targets for integrated capacity right across the value chain and these strong policy tailwinds, what's next? What could be the next big tech breakthrough or maybe policy change that really shifts the scale of solar manufacturing in India again? And how do companies like Premier Energies stay ahead, ensure they keep leading? What stands out to you most about how this company isn't just playing the game, but maybe helping write the rules for clean energy in India?